In this video, I'm going to show you how to safely and effectively retire with passive, consistent income running the wheel strategy on the SPY. And the reason why the SPY is such a great choice for running the wheel strategy is when you get assigned, and believe me, it's not a matter of if, it's a matter of when you're assigned, this is a much safer investment than any one stock because it's an index. So as stocks start to do poorly, eventually they could be removed from the index and better stocks that are growing much quicker will be added. They can rebalance, and they do rebalance multiple times a year, and therefore recovery is almost guaranteed pretty much. That's why the SPY is continually going up all the time. There are pullbacks, but over the last 25 years, it's pretty much been a complete uptrend, which is why it is so powerful. I am going to show you exactly how to get in safely and how to make money and retire running the wheel strategy on the SPY. So stick around, because in this video, I'm going to show you one of my secret strategies that I use to gauge zero DTE on SPY to make extra money. And it works very well, and it's very powerful. So you don't want to miss that. It's going to be in the video somewhere coming up. So stick around for that. First, before we get into today's video, huge announcement. My free masterclass webinar returns this Friday, May 9th, 6 p.m. Eastern, 3 p.m. Pacific. The link is in the information box below. Very limited spots for this webinar. I'm going to teach you things that I've only previously taught exclusively to Discord students and elite coaching. And I'm going to show you the same strategies that I teach them and how we made bank on Microsoft. We made bank on Palantir, Nvidia, and Walmart during this down market. I made $20,000 on Microsoft. The trade is right there on the screen. This is what we do in a down market. You do not want to miss this webinar this Friday, May 9th, 6 p.m. Eastern, 3 p.m. Pacific. I have a huge announcement, and I'll be hosting a Q&A so you can ask me questions, and I look forward to seeing you there. So here we are looking at SPY. We can see we got ourselves a nice grand W right here. Break of structure happened here, but we're looking at a possible double peak. It needs to hold, and this 50-day on the 4-hour is going to be coming up something like this, and the 200-day like that. So our crossover is going to happen somewhere Monday or Tuesday, possibly Wednesday this week. That's what I'm looking for. And the best way to look at this is my price action, which I teach in Discord, and I have a price action guide between 537, 540, and then another area of high interest on SPY, 540 to 560. So what we're going to do is we are going to look at the chart and see, okay, there's a lot of safety right here because the stock dipped. So the 553, 554 mark, very safe. If we want to play aggressive, we could sell 560s. And if we look at this 560, would be right around the bottom right here, right at the top of this gap. So we could do that. We'd go over here and click on 560. We would get 575 roughly. Going 2 weeks out, we would sell 10 of these. Would actually be 57.50 for 10 of them. So we're going to sell 57.50 times 2, 11,500 per month. Now, remember, if we get assigned at 560 minus 575, our average cost is actually 554.25. And if we get assigned, and let's say the stock drops down here to like 550, well, our average cost is only $4 above because of the cost of the put. So now we can sell 560 calls or 562 calls going out 2 weeks. So let's say we sell these puts for just 1 month. We made $11,500. Okay, we're going to clear this out. And then we're going to sell 562 puts if the stock hypothetically was to go down in theory to, let's say, 550. We'd be selling $12 out of the money covered calls 2 weeks out. And if we did that right now, $12 out of the money would be 578. So a 578 going out 2 weeks would be 361. So we would sell 10 of these covered calls and we would generate $3,600 for 2 weeks. So even if it recovered and this happened in 2 weeks, we'd make $11,500 plus we would make another $3,610 if we did this for another month. 3610 times 2, 18,000 over 2 months with put and call premium, and then our entry and exit was $2 away. So you're looking at $200 times 10, which is 2,000. So you add that. So there you have it. $20,000 divided by 2 is $10,000 a month. Now there are times where you're going to have the stock. It's going to be crazy and it'll drop 550 and drop down here, maybe say 541, 542. Okay, you are $15 $2,000 out of the money in the loss because you got assigned at 560 and your average cost with the put premium is 554. And aside from waiting to sell covered calls for the stock to go up, what you can do is actually sell covered calls at break even to generate premium, losing any potential profits. And while you're doing that, you can consistently make safe money until the stock rises. Now, the only risk with this is that if the stock was to rise above 554, well, then you'd be assigned the stock. But worst case, if that happened, something like this, you'd be assigned at 554 at break even. So that means you didn't gain or lose. The only premium you get to keep is the covered call premium, but it's still better than nothing. And then if that happens on the stock and it comes back up to here, well, then you can go down into the 558, 560 and start all over. And typically using this strategy, like I'm doing right now, this is a pretty good spot to be in. And like I told you, I'm going to show you in this video my zero DTE strategy. So stick around for that. You don't want to skip any part because it's coming up soon. You get to see how I trade on a zero DTE to make extra money on the SPY and my very secret strategy and how I gauge the SPY to where it's going. And I teach this in the Discord. If you guys are enjoying these strategies and you want to learn more, I offer 2 weekly coaching sessions per week recorded. You get to copy my trades. You have a full training course, access to an Ask Corey section, trade alert section, different sections for different strategies, the wheel strategy, as well as leap option strategies and day trading. So if you guys are interested, I would love to help you guys. Can set up the links in the information box below, investwithcorey.com. Look forward to helping you very soon. And so if this was to happen, we would have to go up $14 out of the money. So that'd be the equivalent of going to 580, which is 294 to break even. But even if we did this with 10 contracts, we would basically be breaking even and we make 3,000 in 2 weeks. So if it happened after 4 weeks, a month, we would break even on the stock, lose nothing, gain nothing, but we'd end up making 6,000 on call premium because all the puts that we sold at 560 brought us to 554. Then we sold a 554 call. So we basically exit at the price that we entered, negating all of the premium from the puts, but we get to keep the premium from the calls. So worst case, 2 months would turn into 6 grand, 3 grand a month. And that's in a down month. And we can also hedge by chasing losses. If you guys want to see my loss aversion and loss chasing strategies, no one ever talks about, comment below. A lot of people, almost everyone, pretty much everyone has loss aversion, which means you run from losses. Imagine someone breaking in your house and you're just running to the house. Oh my God, don't hit me in the back. Don't hit me in the back. That's loss aversion. Instead, in theory, you would stand by your door to the side in the dark. And when the perpetrator comes in your door, whack in the back of the head, they get a frying pan. That's chasing your losses head on. And I have strategies for that. I also teach them in thorough detail in the Discord. So if you're interested, like I said, link below. If you want to see a video discussing this on YouTube, comment below and let me know that you want to see it. So there are going to be times on the SPY where you get into the stock and you're going to end up selling a covered call and get a sign and get out at break even or slightly below. Maybe you lose a little bit of money, but by the time you factor in the covered calls, you'll make money. So essentially, you're going to have maybe 2 months of the year, maybe 3, where you're getting out right below break even or right above or right at break even. You're just keeping call premium and maybe you're making 3 grand a month, 4 grand a month. So that'll happen. On average, 2 months out of the year, it'll happen on the SPY. Sometimes only happens one time, but let's just say it happens twice. You have 2 months like that. You have 10 other months that average 10,000 a month from puts and calls and profit on exiting. Maybe 1 month is 8, 1 month is 12, but on average, it's about $9,000 or $10,000 a month. If you do that, that is $100,000 a year plus the 2 months that are, 3 to 4 grand. So you can make about $120,000 a year. And if you divide, and I'll show you here, let's just say on the average month, you have $10,000 times 10, plus you have 2 other months that are around 4,000 each, plus 4,000, 108 divided by 12. You're going to average about $9,000 a month. So, $10,000 a month is very doable. It just depends on what happens in the market. But on average, $8,000 to $10,000 a month on SPY and very, very safe. And you want to be very cautious of price action and you want to make sure that you're selling puts below the most recent support. So in this situation, 555 and 560 is fairly safe going a week out or 2 weeks out, but I would prefer 555. This would be more like $7,000 a month, but it'd be a lot safer. And you can make very safe passive income because the SPY is the safest way to trade. If we look at the daily chart, let me show you why this strategy is okay long term. Even if the stock was to tank completely, or the ETF, you'd end up just holding this stock for 3 or 4 months and you'd be okay. Look at the last 25 years. So this pullback right here in consolidation lasted from January 22 to October 22, 8 months. And then it started working its way back up. So 8 months there, right here, February of 20 to April of 20. So 3 months here, 2 months here, and then right here was about a month. Right here was about a month. And then this pullback right here has lasted about 2 months and we're recovering. So maybe 3 months. So on average, 2 to 3 months every 2 years. So it's really nothing to think about because when you look all the way back to 2015, it's been a straight run up. The only real problem was the pandemic. If you take that out of the question, then we'd probably be way up here somewhere. But besides the pandemic, just normal pullbacks. So it's very safe. Now, I want to show you my zero DTE strategy. So this is a very powerful strategy on the SPY. Very brief, but if you guys want to see it, full video, leave a comment below and I will show you guys how I run this on SPY. So we're going to look at Friday, April 11th. We're going to look at the 4 a.m. Everything opens up and it looks like between 4 a.m. and 9:30 that the highest price was 544. So the high was 544 and the low looks to be about 539 or 540. So we'll put 539, just a rough estimate right now because we're doing it quickly to show you guys a general idea. And I teach this in Discord. It's very powerful for zero DTE and day trading, the SPY. And what we're looking for is when the bell opens, if SPY breaks the pre-market high, then it's likely to stay above the pre-market high and you go $1 or $2 below and sell a put. If the SPY falls below the pre-market low, 539, then you go $1 or $2 above and sell a covered call. Because that's typically 70 to 80% of the time what happens. And I have strategies to hedge when, the other 10 or 20% happens. So we can see that when the SPY opened at 9:30, it tried to run up and it could not break 543. The previous candle you can see here, 544. And then it tried very hard to break right there and right here and right there and could not break 544 or 543. And then it fell down here, breaking the pre-market low at 12 o'clock. So where we really would want to enter in this trade is we would see that right here at 9:30, it dipped below, it came up, it actually broke below right there. And that is your confluence. Let me zoom in so you guys can see this. It actually broke below. Even though it closed and it turned green, it did go back up and that is scary, but it did break down here. And then when it comes back up right here at 11 a.m., it's dipping down. And if you wanted to wait till 11 a.m. to be even safer, as this candle is closing at 11:30, this is your confluence right here to sell your daily put or the put for the next day. But this is more powerful for the day. So you would have wanted to get in right around 11:10, 11:15 when this happened, or back here at 9:45 when it broke. The mere fact that it came all the way down to 539, we can actually look at this candle and the low was 539.21 and the pre-market low was 539.26. So barely broke, but it did go below briefly. So this is pretty tight, but this is typically what happens. And if we look at the stock or the ETF, we will see that at 4 p.m. the stock closed way down at 535 and it did not break this high. I have a lot more to go over on the zero DTE strategy, but if you do this strategy, you can go just slightly out of the money. Meaning in this scenario being bullish, we would have immediately right around here, we would have sold a covered call at 544 when SPY was 539, and that would have been $5 out of the money. And if we sell a covered call and we do this $5 out of the money, which would be like a 571 in the current price, this would be about $94 a day. So if we're doing 10 contracts a day, we're making $940 a day. So we're making like $5,000 a week, $20,000 a month. Now, if we're only doing 5 contracts, we're doing $10,000 a month on 5 contracts daily on the covered call. Same with the puts. If the stock had went to 545, we would have sold a 539. The put would have been $5 out of the money, which is the equivalent of a 561. If we were to sell a 561, then we'd be looking at 89. Same thing. We sell 5 of these bad boys and we sell them at $90. Again, $450 a day. Bust out the calculator. $450 times 5 times 4 more, about $9,000 a month. Zero DTE, and we can make even more. If we played 540, make a little extra money, might make $11,000 or $12,000 a month if we decide to do some day trading. And that's on half the contracts of the swing trading and the wheel strategy. So zero DTE, if we're doing the same contracts, would be potentially between $15,000 and $20,000 a month. If we're running half the contracts, half the risk, doing more work, we could make the same money with half the capital. If you guys want to see this video, comment below. The zero DTE strategy is very powerful, and I am teaching this to my students consistently in Discord. It's something you guys definitely want to learn. And if you guys are interested in learning more and want to join my Discord, the link is in the information box below. You guys can copy my trades, trade alerts, chat with other students, 2 morning coaching calls twice a week that are recorded during the market being live and open. And you get to watch me trade, copy my trade, ask me questions in a specific section 24 hours a day, and you get access to over 6 hours of video on demand, which I have put a lot of work into for training you start to finish on everything you need to know to get started. It is really honestly the best way to get yourself on the right track to retirement. And like I said, I have already achieved financial freedom and I have everything that I could ever want. I love spending time with my family. So money for me, not as important. For me, it's about helping others and achieving a goal. And my goal is to help as many people as I can, just like you. So I hope to see you real soon. So if the ETF drops all the way down, you get assigned, comes back up and you get assigned on these calls, takes 2 months, whatnot, you get out and the stock comes all the way up here, new highs. What you're going to want to do is wait for a quick cool off period, and you're going to want to go below the most recent high. So it's done this number right here, pulls back, and then runs and breaks this structure right here. And the stock is maybe, let's say 578, 575. You're going to want to go below the recent high, maybe down here 565, and sell puts down here. This typically is a lot safer. And when you do this, you're going to continue to be able to sell put options roughly at the same premium and covered calls at the same premium. We're basically moving with the stock. And then if the stock was to pull back down and you got assigned, then essentially you'd be selling covered calls at break even, which would be at 565 puts, probably breaking even around 560. So right here. So even if the ETF, if SPY comes down here, you could sell these call options, which would essentially only be about $20 out of the money. Even if you go a month out, you're still going to generate $3,000, $4,000 that month. And if you don't get assigned, it's free money. And it'll average out by the end of the year. It really will. So you might have a couple of months like this, and other months it'll drop down, you get assigned, it'll start coming back up, and you'll end up selling a covered call up here. But typically when this happens, you're usually not going to get assigned in these calls 1 week out. When it drops like this, it usually consolidates, for a little bit of time. And then, after a week or two, these calls expire, the stock will start to move and you can go a little higher. And then as the stock goes up like this, you just keep selling. And you're probably only going to be assigned a handful of times throughout the year. If you do it right, it'll only happen maybe twice a year on the puts, 2 or 3 times on the calls. And you're going on a 2-week window here. Well, you're going to do this 26 times. You're probably only going to be assigned 4 or 5, maybe 6 times out of 26. There's going to be a lot of selling call options and nothing happening. So it's very consistent, especially with the SPY, and it doesn't pull back very hard and very often. So it's going to be more times than not, you're going to sell puts. And eventually when you do get in the puts, you're going to be consistently selling covered calls and rolling covered calls and making premium, which is exactly the name of the game. And then if and when you lose the shares and get assigned on those calls, that's when we start positioning ourselves very strongly to re-enter the stock and sell puts. Remember, the SPY is safer than any other stock. So even if you get assigned and it goes down, time will give you what you need to recover in case of something drastic happening, which has only happened 2 or 3 times in 25 years. And we just made it out of 1 in 2020, 1 in 2022, and now again in the past couple of months. And SPY is very strong. If you guys want to learn any more of these strategies or you want more help growing your portfolio, I would love to coach and mentor you and help you achieve your goals and your potential retirement. Or if you're just getting started in the market, I really want to help you grow and understand a lot more. You guys can sign up at any time, investwithcorey.com. Links in the information box below. My free masterclass webinar returns this Friday, May 9th, 6 p.m. Eastern, 3 p.m. Pacific. The link is in the information box below. Very limited spot. I look forward to seeing you on the next video and in the Discord. Take care of yourselves, fam.